All right, guys. So these are my positions heading into the weekend. I had an ETH long yesterday from the exact low. We longed ADA from the exact low. Never loads. Right, we longed ADA from the exact low. Bitcoin, the Bitcoin entry was actually, I'm very proud of the Bitcoin entry. Let's see how low I longed it from. So Bitcoin went as low as $100,320, and my long is from $100,604. That's only a 0.1 position Bitcoin, right? Only 0.1 Bitcoin position, and that was a starter position, right? That was actually supposed to be a starter position, so this one was more of a fluke, but I just took a couple of short positions right now, almost one Bitcoin. Up $450, a little scalpy poo heading into the weekend, but these are my open positions right now. Obviously, I've taken profits on the longs, and I am looking for potentially a pullback here. But we're not here to talk about the shorts. We'll see how the shorts work out, and if they work out, we'll talk about them tomorrow. But let's talk about the longs, and I want to talk about something that I don't actually see many people talk about. Actually, I don't think anybody's ever talked about this, so this might help you with your crypto trading if you are struggling. So that's kind of the intention of this video. Before we begin, I did actually let everybody know in the Nexus, which is my premium network, by the way, that I took these longs. And so these began, like these long positions that I took on Bitcoin from the exact low, on Ethereum, on Cardano, all three of them were actually very good risk rewards. Like this was already a full risk reward trade, right? So very high probability, very high win rate. And then ultimately, like that could have turned into a 20 risk reward if you didn't take profit until now. Obviously, I took profit. You need to take profit in these markets. But let's talk about the longs, okay? How did we get the longs, and what do I want to talk about? And the thing that I want to talk about, this is my short position, by the way. I'm targeting 103,000. Little scalpy poo from this morning. It's like that. Anyway, how did we get into this long position, okay? And across the board as well. I'm not really one that usually will trade multiple pairs like this, but when things look juicy, I will consider it. And I want to go over how I entered this, and I want to talk about this one specific thing which will help you significantly, okay? I'm not going to get too technical with this video. It's not really necessary to do that. But the thing that I want to talk to you about is that the entire market works in tandem, okay? Now, hear me out. Whether you trade altcoins or a bunch of different coins or not, I imagine most people do, which I highly advise against, by the way, but I imagine most people do. Whether you're trading multiple coins or not, my recommendation is to at least understand where your key levels are on a few different pairs, and I'll tell you why. There's two reasons to do that. Number one, the secret pro tip that I have for you is that the entire market moves in tandem, okay? You guys have heard me say on live that Bitcoin and Ethereum work in tandem, which they do, okay? They're correlating assets, obviously. It's usually unlikely to see Bitcoin up and Ethereum down, or vice versa, but we can take it even a step further and say that the entire market moves in tandem. And what do I mean by that? I mean that usually the entire market, when the real bounce is there, the entire market is at a key level, okay? Now, each coin is related to Bitcoin based on where it's at on the chart. So the key level that every other coin is at does not need to be the same key level that Bitcoin is at relative to where it's at in the chart, right? If you're at a range and you SFP the low or swing failure pattern the low, for example, your other alts don't necessarily need to swing failure their range low. They could have already broken down and hit a bullish order block, for example. But the point is that each one of those are usually, not always, but usually the entire market moves in tandem, and usually the entire market is at a key level. The second reason why you want to be paying attention to these other coins as well, okay? That doesn't mean trade them, but just so that you are aware of where they are relative to their key levels. The second reason why you want to know that is because for me personally, I can only speak for myself. Guys, I don't marry one coin, okay? I don't marry Bitcoin, I don't marry Ethereum, I don't marry Cardano, XRP, Dogecoin, Solana, Sui. I don't care. I trade what's easy, and I'm a structure-based trader, okay? I can sit here and do all the technicals and trade the range and look for the flip zones and look for the liquidity and whatever. Or I can keep things just very simple and just trade a market structure flip that I see in an area that looks good, that has good liquidity that it could recover from, okay? And so what do I mean by that? I mean, when we are at these key zones and I'm seeing signs of strength and I'm thinking that, okay, maybe the market does decide to turn from here, I would rather trade something as opposed to, for example, Bitcoin, which doesn't really look great. I would rather trade Ethereum because Ethereum is the easier trade. What do I mean by that? Well, number one, we know that they're in key zones. So the likelihood of the market bouncing in this area makes sense because Bitcoin and Ethereum are both in key zones. If we zoom out, Bitcoin took the range low. Okay, now it taking the range low was very easy, right? You guys, if you've been around on the channel, you know all I do is I talk about liquidity. So that's easy. That's easy liquidity that they can come and take. And by the way, I'm not saying they're going to come for it, but there's a lot of liquidity down below. So if we start breaking down from here, it's really not a good look for crypto or the entire or for Bitcoin or the entire market. But anyways, so they had easy liquidity. So this is obviously a key level, right? Like if they sweep the range low, that's obviously a level that you want to be paying attention to. Now, like I said, I'm a structure-based trader. Okay, of course, I still use Market Cipher and I do use it to help refine entries, but primarily I'm utilizing structure. And while Bitcoin hit its key level in that it being the range SFP, so did Ethereum, but Ethereum gave me a way better structure criteria to actually enter from. Okay, and what does that look like? Well, you have low, you have high, and then you have low SFP, which is just a swing failure pattern of the low, which is already telling me that we can now target that high. Why can I start entering here, and how could I have entered it, which is what we're going to go over in just a moment. But it's because we're at the key level. We're seeing that SFP. I was fully prepared to come and take the low one more time, which would effectively give us a model 1 accumulation. However, I was looking at my return to zone. In other words, I have liquidity being built up here. So it's an easy move to the upside. When I gave this trade to the Nexus, no different than Cardano, okay? Where was my immediate target? It was just the range high. And so this is what I do. I am scalping the range, right? With the understanding that this is a high probability, higher time frame key zone, which could be a runner essentially. So you take profit where you need to take profit and you send price up. Now, I literally recently, I got to tell you guys a story. Maybe I'll make a video tomorrow. But recently I'm back in my scalper's mindset, okay? Because I made a mistake this week. And I think the mistake needed to happen because now I'm in this new mindset. So big money right on the beginning, take profit where you got to take profit, and then let the rest run as opposed to trying to hit the home run. But the point is that Ethereum gave very clear structure, and you're just trading this range, right? All I'm doing is I'm trading this range, no different than I'm trading every other range right now. Like even right now, you know, you can trade this range right here, understanding that this may result in a higher pullback because even if this is going to be the low, it's not going to go up forever. It could do this, right? So we're trading from here to here and then looking for a new range and then trading that range up to here, etc. I hope you get the point. So understanding that, I'm just trading this local range, understanding that it could bounce. And for me, Ethereum was way better of a trade than Bitcoin. And that's why on my position sizes here, you can see that Bitcoin was only in 0.1 because it never took the low again, right? So when I'm trading the local range, I didn't have a reference point in terms of structure. I had to utilize flip zones. And to be honest with you, like I said, I only went in 0.1 Bitcoin because I thought potentially that we could come down to like 99, 90, you know, 99, like not between 99 and $100,000. So I was going to start like, you know, kind of laddering in. That's why it's only 0.1. Whereas my Ethereum long, I initially went in, I think it was like 30 Ethereum or something. And I shaved off 25 now. And, you know, now I'm looking short. But when you are at those key levels and the entire market is at the key levels, then you can have a lot more confidence with your trades, which is basically the point of this video, right? Cardano was no different. Cardano, we came down to a key zone, a very, very important key zone. I actually suspect that this might be the low on Cardano. Obviously, we don't know for sure, but it could be a decent low on Cardano. I'm expecting it to, I'm expecting higher. And that was actually the mistake that I made this week was I was paying too much attention on Cardano and I was thinking that Cardano was going to go higher from like here. So I was wrong. I was definitely wrong about Cardano earlier this week, but nonetheless, the point here is that Cardano hit a key level, Ethereum hit a key level, Bitcoin hit a key level, and my favorite ticker of all, in my opinion, the only ticker that you need and the best indicator, which I still need to make a video on. So if you want to hear the video, make sure to hit the like button and subscribe because I will make it eventually. I'll make it soon. But USDT dominance also hit a key level. So when everything is hitting key levels at the exact same time and you're good and you're confident with your levels, man, you can really hammer it home as long as you just trade the local range and trade what's easy, right? So that's pro tip 1 is when you are confident with your levels and the whole market hits key levels, that's very good. It's good confluence. And the pro tip number 2 was trade what's easy because Bitcoin here wasn't easy, but I'm not married to Bitcoin. I don't care. So all along Ethereum was a lot easier than Bitcoin was. And Cardano was kind of in the middle, right? Because you didn't actually have a market structure flip, but you did have an internal range SFP, which is actually where I entered. Okay. So I'm going to go over the Ethereum long real quick because it's not that complicated. And then we'll call it a video, okay? So what do we have? We came into the key zone. We knew we swept that low. We have a range like this as follows. As soon as we swept that low, I actually told the Nexus that I was looking for a long, and it didn't play out. Well, I was looking for 2 potential longs. So let's go right here. So I told the Nexus right here. I don't know if I deleted it. No, I didn't delete it. Right here. ETH scalps, okay? So I said ETH scalps. This was right here. We didn't get this big wick to the downside yet. And all I was thinking was that if we were to take the high again, I would look for a backtest long up to the range high because I identified that liquidity, right? Very, very simple. Not a complicated trade. Doesn't need to be a complicated video. That obviously didn't happen. We got a big wick to the downside. Remember, I keep everybody updated in real time on the Nexus all the time. We had the big wick. I said that's no trade. And then I gave the follow-up trade, which was if we were to break above, then we come back and look for the retest. And that is exactly what happened. So let's just go over it, okay? We had low, we had high, we had low, we had high, we had low, we had up, and we had break. Where did we come to? We came into, you could have done it 2 ways. This is your range-based demand. Came into the range-based demand. You didn't really get a reconfirmation, but you didn't really need a reconfirmation because, again, we already know that we have this SFP. We already know that we have all this liquidity. We already know that this is our zone and you wicked it out ever so slightly, which is okay. That happens. And we already know that the entire market was confluent with each other. So we were already basing our bias locally to the upside, okay? We weren't going to short here. That's never going to happen. You could have done it this way and started scaling in, or you could have done it this way where you found your last order block and you could have had a really nice risk to reward trade. Now, I didn't do this. Okay, I definitely did not do this. I wish I did. That would have been a banging trade. Let's just, for the interest of science, see how much you could have gotten away with. Holy bananas, 15 risk to reward trade. I'd take that any day. But anyways, you could have done it that way. You could have done it like stop below the low. You could have just scaled in, whatever. I just scaled in, which is why my Ethereum long entry is here, right? So you can see like I was scaling in. I actually went in a little bit on the break. So I went in here. I went in here and then I started scaling in, and you know, the rest is history. Had I had gotten, by the way, since we're here, had I had gotten a nice market structure flip, down, up like that, I would have went full position there, stopped below that low, and then, you know, rode it to the upside. That didn't happen. Sometimes that happens. You don't always get what you want, but hey, it is what it is. We live to trade another day, and especially because now my mindset is in this scalp mode. I'm so happy that yesterday happened, and I kind of like made a mistake yesterday. Now, man, this is my like motto for the next little while, and you're gonna start seeing these kind of videos. So if you want to see these kind of videos, let me know. But I'm gonna start doing daily recap videos of the trades that I take that day. Like tomorrow, I'll make one on this short trade if it works out or whatever. We'll talk about it. More wins, more losses, more trades. That's basically what, you know, I'm gonna bring it. Just, you know, scalping local ranges. You know, like I said, right now I'm in a position looking for $1,000 lower. Nothing crazy. But anyways, that was the long. That's how I hit the longs and how I sniped the low on Bitcoin. Again, Bitcoin was a little bit more of a fluke. It was a starter position. In hindsight, there was a flip zone, whatever. But instead of doing all that, just trade what's easy. This is something I preach to the Nexus all the time. Just trade what's easy. You don't need to get super complicated. Why? Just look for the market structure flip and trade that. It's way easier. I'm sure if I bounce around, I could find like a nice flip on another coin that looks a lot better. Look at Solana, right? Solana, obviously hindsight trading is 2020, but Solana had a flip. Okay, start going in on right there. Boom, up and away you went, right? The point is trade what's easy, okay? Now, have a good weekend. I'll see you guys later. Get out of here. Love, one love. I can't even say my words anymore. Peace out, Nexus. I love you. Ooh.